central bank digital currencies. CBDCs are basically a digitized form of fiat currency which is going to be issued on a distributed ledger, a blockchain.
And the key benefit of having CBDCs or central bank issued digital currency is that it would enable the population of a country to conduct peer-to-peer transactions, meaning they do not have to use intermediaries, be it banks or payment service providers. It would enable financial inclusion for the unbanked or the population or the segment of populations within a country which have been prevented or have not had the ability to access the financial system via these intermediaries such as commercial banks. Alternatively, it can also be a substitute for current accounts or savings accounts where one wishes to store their excess wealth, because if the central bank would going to give you a wallet in which you can store your cash, why would you need a commercial bank? Whom do you trust more, the central bank or a central bank licensed regulated intermediary, which is a commercial bank? These CBDCs, when issued, would significantly enable disintermediating banking. In addition to disintermediating banking services, they can also enable instant security settlements, whereby when digital securities are issued on a ledger and are transferable instantaneously when a trade happens, CBDCs would enable to conclude this settlement process more swiftly, more efficiently, and in holistically, they improve payment systems resiliency and all attributes related to its contingency planning, in addition to KYCs.
Absolutely, to know your customer, anti-money laundering systems basically, which are usually nowadays like a systematic approach that is in place for every transaction to be done. So on top of that, we can also look at counterfeiting. How often do we go and travel and we have a fake $50 note or a fake $50 euro note in our hands? So this is basically something which is going to be eradicated.
More importantly, CBDCs can also prevent monopolistic players or oligopolistic practices within the payment systems. We find today Visa, MasterCard, or even PayPal commanding significant market share, or a portion of market share which is large enough that they are able to threaten, and also rather more than threaten, even block new emergent fintech players coming to this system and improving it for all of us, the consumers. CBDCs can prevent creation of another oligopolistic practices or players such as this.
Yeah, so MasterCard, Visa, PayPal will not have their own monopoly to keep on running the show. So if you look at what is also happening worldwide, central bank, more than 40 projects we are aware of where central banks are actively looking into digital currencies as it is.
Project Baxter of the Bundesbank, Germany, Project Intanon from the Thai Central Bank, Project Coca from the South African Central Bank.
We have e-krona out of Sweden, and then here in the UAE and Saudi Arabia we have Project Aber, where also they are creating a digital currency.
Especially for trade finance, Project Aber is more focusing on. But all in all, it goes on to show we are living during a phase in the financial services industry which is about to witness transformative changes.
Absolutely.